Thank you very much, Elena and Julia, for this nice introduction. The topic I want to talk to you about is for companies that are entering the United States market from overseas, or even the companies who have been operating here for quite some time and would like to continue to grow. That's the topic that I want to talk about. Now, specifically in terms of globalization and global business and entering U.S. market. U.S. market continues to be one of the most attractive markets out there in terms of doing business. So anyone who's coming from China, Europe, Asia, Middle East are still thinking of United States market as the number one market in the world to do business in. However, as we all know, it is also the most controversial and most difficult market because of competition, because of specifics like the patents that Julia was just talking about, the regulatory environment, and so forth and so on. So depending on what kind of business you're in, you may be challenged by a number of different factors when you enter the U.S. market. Aside from the fact that if you're a foreigner, if you're a foreign citizen, you may have to worry about H-1B visas, you may have to worry about legal issues, and so forth. With that said, there's still plenty of companies that are coming here to do business and to be successful. And here's what qualifies me to talk about this topic. I've traveled to 70 plus countries worldwide. I've done business in 10 plus countries worldwide. And I belong to a number of organizations that are United States and foreign as well. I've built products overseas and here in the United States. I've invested into products as well. Alexander will continue on the topic of investment. So I think I have a good idea, good understanding, or pretty good idea of what it would take for someone to do business here. So let's continue. I'd like to talk about the state of the state in terms of all these different pressures on companies here domestically and companies who are entering the United States market. The state of the state is such that after COVID-19, which is still, by the way, going, there's still people who are contracting COVID now, believe it or not. We have a pretty significant development in Europe, a war in Ukraine, the looming recession. The economists are reminding us every day that the recession is coming. The recession is coming. Aside from the fact that we have layoffs with major corporations because digital transformation and artificial intelligence is threatening the livelihood of many. It certainly is helping many as well, but that's a different conversation altogether. What can we learn from those pressures and those experiences? Well, what we can learn is that true value counts, right? True value counts. Obviously, we're seeing that the growth of online businesses still continues, and some of the brick and mortar businesses are not doing as well, unless, of course, they are also having online presence. The other issue is that relevance, speed, and differentiation are continuing to be very important topics. So you need to be relevant, not important, not self-important, but relevant. You need to be able to solve the pain. You need to be able to solve the problem. We're also seeing a flattening of the global business. That means that doing business anywhere in the world is a lot easier now with the intertwined and integrated economies, with technologies, with innovation. It's a lot easier to do business these days than it was, let's say, 20 years ago. It's very important not to confuse relevance and marketing with hype, right? So there are a lot of startups, scale-ups, especially, and even investors to a certain extent, they like to follow hype. They like to follow a trend without really understanding what they're investing into, what they're developing, what they're starting as a business, and so forth and so on. And chaos, we're still in kind of chaos, and chaos becomes the controlled chaos, and that's becoming a new normal. So it's very important to ask yourselves a question whether you enter a new market, especially U.S. market, or you're trying to expand your business here, being a domestic company. Are you a part of a problem, or are you part of a solution? Right. So if you're not solving a problem, then you may be part of that problem. Are you relevant? Again, I'll repeat that word. I like that word. It's my favorite word. And what is your true value? How do you calculate and quantify the true value? Again, investors, customers, clients, especially in the United States, like the quantification. Elena was talking about this before. It's important to quantify your solution. It's important to quantify how it's going to solve the problem. Are you different? Again, this is the marketing part of it, where it's important to understand, are you different at all? And will you survive, or will you thrive as well? That's another very important piece of it. How can you prepare yourself? You can certainly do a lot of different things, one of which is a methodology that is being used by a number of companies, a methodology that looks at your assessment from a standpoint of technology, if you're a technology company, and also looks at it from a standpoint of market and marketing, right? So if your technology readiness level is low, the likelihood of you being successful and competitive is going to be very low as well. So the question is, are you ready technologically? Are you ready market-wise? In other words, are you going to be, getting into a very saturated market? And will your solution or product be competitive in that market? Very important to do that level of research prior to any of your developments in the new market, right? And then you can actually plot this. This information can be made available later on after this webinar, but you can actually plug yourself into the future score, your current score. You can compare yourself to competition, and you can actually make it very scientific in terms of predicting your level of success. As far as the marketing is concerned, there are a number of ways to take a look at your solution, take a look at your product or a service. One is you have to target. As a marketer, I love to talk about targeting and segmentation. So you have to, the more focused you are, the more targeted you are, the more successful you're going to be. You can't sell everything to everybody. Even the investors will not accept that as a model, because it's going to be very difficult to quantify. It's going to be very difficult to predict the success of it. Then, if you're a B2C business, a lot of it is going to be behavioral, right? So your behavior of the consumer will play a big role. Many B2C businesses actually can be doing well as a B2B business by selling and patenting the technology. Julia talked about this a little bit. And actually reselling that technology to the existing customers with the existing clients, right? So that's an easier path into market. Again, competition, you have to be mindful of the competition. And then certain triggers. How do you start a business, or how do you start with a pilot? Do you start with what we call the MVP, friends and family business, and so forth and so on? So this is an example of how we, for example, our company conducts competitive research. We actually plot, and this is Monday.com, a very easily available tool. We actually plot competition based on the variety of different factors, and we can actually see some of the gaps and holes in that particular chart, right, on that particular matrix, if you will. So it's very easy to see, based on functions and features, of what the competition is doing and how you can enter the market and where you can potentially plug those holes, right? The second piece that's very important for a local or global business is marketing and lead generation. So it's very important to understand how you earn the media recognition, how you can pay for it, and how you can own it, right? Again, earned versus paid versus owned. A lot of those things, a lot of those reputational items need to be earned. You can certainly buy your way into markets by doing advertising and so forth, and you can own some of that media by actually producing content and establishing yourself as a differentiated company or differentiated solution. So in this particular case, you can get traffic, you can attract traffic, you can create leads, you can convert those leads. Again, there are a number of different ways to do this. I simply don't have the time to go into the details. You can get customers, you can then analyze, optimize, and you can repeat the same cycle, right? So I'm going to skip some of these things. There are a number of other ways that you can market. For example, account-based marketing is a technique that you can use in marketing where you don't necessarily have to market to everybody. You can only market and create your content, create your differentiation within a certain very focused segment of the market. You can literally identify the companies you want to go after, and then you market to those companies with very personalized and differentiated content. Okay. Again, I'm going to speed this up a little bit. This is very important. When you market and you sell, how, and let's say you're a startup or scale up, what does your team look like? What do your resources look like? Resources happen to be still the most expensive investment that you can make when you trying to grow, when you're trying to enter a new market. So you can actually predict or you can calculate the market team size based on the stage you're in. And especially right now, you can augment that with the use of new technologies such as artificial intelligence, where you can create content, you can ask for advice, you can create mentors, virtualize some of the processes and so forth. Okay. Again, I'm not going to go through this. This is just a way that lead generation and marketing works through a variety of different channels. This can almost be science, and I can talk, about this for hours and hours and hours. The point here is that you have to use as many channels to create your brand as possible, as much as your resources would allow you, because the more the better, but you have to be focused about this as well, right? You have to study every channel, and you have to study and, through analytics and analyze what is the success factor of every channel that's out there. In addition to artificial intelligence, what's important in your business is as much automation and marketing automation as possible. As you can imagine, a lot of the businesses today are using automation, using new innovations that are available. And for small companies, for scale-ups and startups even, a lot of the tools that are available today were only available to very large organizations. Well, luckily, with new innovations, new technologies, some of this is now available to smaller businesses. So it's very important to use technology, use instruments. A lot of the stuff is available on the internet. Many of these tools are, free of charge, so you can actually leverage that. So in that sense, it is important to use these types of instruments. And finally, business development. As we say in New York City, I'm from New York. You have 30 seconds to earn your next 30 minutes, and then you have 30 minutes to close the deal. Very important in terms of business development and sales, and of course, Elena knows this very well, to tell your story, to be very openly communicating, to communicate clearly, and to communicate in a very focused manner, right? So in that sense, customers, not just in New York City, but pretty much everywhere, they want to hear your story about your company and you, not necessarily about your product. They want to hear how you're going to solve their business problem. They want to hear this, they want this to be about them, about the customer, not about you. Nobody really cares, in New York especially, nobody really cares about you. I mean, they do, but they certainly care more about themselves. They also want to know what value will you bring to the table, whether you understand the business, the quantification of their business, and the ROI. Americans especially are very astute in terms of analytics, in terms of financial justification. And, this is what they want to hear. And finally, they want your solution to be optimized with their need, right? So if your product is not as flexible, it may be a challenge, right? Some of those tips. The other piece that's extremely important is everybody loves a great story. And I think it's important to tell your story. And I'm going to give you a little bit of, a few tips, a little exercise. When you go home after this event, try to describe your company, try to describe your solution in 7 or less words, okay? 7 words. It's going to actually create a little bit of a challenge for you, but stick to it. Try to stick to this. Not 6, not 8, try 7, right? And let's see if you can do that. And if you can't do it, you try to refine that story a little bit better. And if they ask for more, then you can tell more as well. Again, you can try this with investors, you can try this with clients, and so forth. Another exercise is tell your story in the context of what are benefits and solutions, what problem are you solving, who are your primary clients, how much do you know about those clients, and so forth, and what is your sort of painkiller, right? And what, why, and how. A mentor a long time ago taught me to approach every problem with 3 words: what, why, and how, right? So can you now, based on this, can you tell your story with those types of parameters? And that's about it. I think this is a great chart because it basically summarizes and tells you how to go from an idea to a deal flow, how to go from an idea that you may have in terms of building the product or solution, in terms of taking the product and solution to market, in terms of doing the market research, doing the assessment, self-assessment, discover the competition, create the value proposition, tell the story, and then execute over and over and over again. Again, this is more of the same. I'm not going to repeat this. You'll be able to have that by contacting Elena. That's it. In conclusion, what I will say is that, yes, it could be unpredictable. It can be dangerous. It could be risky. But most importantly, it can be very interesting, that experience of growth, of entering new markets. And if you follow simple formulas and execute over and over and over again, you can be successful. Thank you very much.
Thank you very much, Alex. It was great and very valuable material, as usual.
And it was fast, right?
Yeah, and it was fast, yeah. Now I want to hand over to Alexander Soroka. Alexander is based in Silicon Valley, so he will share basically this real investor, and so you guys basically one handshake from Elon Musk. So Alexander, please tell us trends and in startup world, how investors feels about startups, what you see over there.
Hello, Alona. Hello, everybody. Thanks for inviting me. Let me shortly introduce myself. I'm managing partner at Network VC. Network VC is the venture fund and a platform for independent VC professionals, which can work together as one entity. And our ecosystem consists of several brands. We have a startup network. It's an open platform where everybody can publish their startups, and today we have 30,000 startups on this platform. We have unicorn events. It is a pitch events which we organize in 55 countries today, so we see startups almost in every developed country. We have a Startup Inc. It's a special tax solution for venture clubs and syndicate clubs that allows them to work together with us, and several other brands like our Silicon Valley Club, where we meet together and talk to the startups and invest together. And today I would like to talk about VC's point of view on the growth, because today's point is growth. And let's just talk about how VCs are looking and what we think about it. And I would say that growth is almost everything in the startup world. And profit is not so important for VC as growth. And, valuations of the startups in venture capital depends on the growth very much. As an example, if you take a startup that have 10 million in revenue and or ARR, yeah. So the valuation can be 10 million or can be 100 million, and it will depend mostly on the growth rate. So if the startup is growing like 3, 4, 5 times per year, the valuation can be 100 million. And if your growth rate is like 10% per year, So your valuation will be the same as your revenue in tech business. And so this is why it's important for startups. And let's just talk about why it is important for VCs as well. And VCs are investing in the startups to make a lot of money. It's a venture world. You're risking a lot, and so you're trying to find a startup that is growing very fast and can bring you a lot of money and big multipliers in the future. And when you do this, you understand that some other players also try to grow in the same space, because today you can copy anything, and it's really hard to find a really unique proposition in the market. Sometimes it's happening with technology, but nevertheless, in some time, you will find some other competitors. And VCs really found a way how to overcome or to kill competitors. And what they discovered, they found a way and give a lot of money to the startup, which is growing fast, and say, okay, you will be the winner of this game. And after the startup raised a lot of money from VCs, they can overcome competitors because they can spend a lot of money on marketing, much more than any other can do it. They can spend a lot of money, a lot of money on developers, and really have maybe the best product. And what is maybe most important, they can dump the market. So they can share their product for free till competitors die. And it is important that when you are going to build a tech business or to grow fast, you need to raise money. Without raising money, you almost don't have chances to compete with other guys who came to Silicon Valley, raised a lot of money, and do the same product or the same business. What is excellent growth rate in the venture capital industry? Usually, if you have just several hundred K in revenue per year, and so VCs are betting that you will grow 5 to 10 times per year. If your revenues are 1, 2, 3, 5 millions, usually VCs are betting that your growth rate will be 3, 4, 5 times per year or more. Of course, more is better, and so your valuation will be higher. So this is approximate numbers that I see today in venture capital world. And the second topic I want to talk is a fast-moving water. Probably everybody saw a river in their lives, and you know that in some part of the river, the water is moving very fast, and in some places, very slow on the sides. And the same situation happens in venture capital world. So there are some industries in which capital is moving very fast, and people talking about these industries a lot. Like today, you can hear it about artificial intelligence, and maybe last few years, the fast-moving water was in blockchain and crypto world, and before it in AR, VR. And so fast-moving water is changing from year to year, and who knows what will be the next fast-moving water. Maybe it will be a military tech or biotech. So usually you cannot predict it. But anyway, you need to understand, if you want to grow fast, it's much better to be in fast-moving water. So this is my short message to our today's participants, and thank you very much again, Elena.
Thank you, Alexander. So, guys, we have 8 minutes left. If you have any questions, please ask. You have unique opportunity to ask any questions you want. Anastasia Lavrinyuk, if you want, please. Could you please a little
But
bit introduce yourself and, ask your question?
yes, well, I work for Lisling company. It's a software developer. So actually, we work with different directions. Sorry. No, it's a services company. So we just get orders, implement them. So we work with not with one client. We work with in different directions and work with different technologies. And one of my directions also investments. So company for now is private, and yes, we are thinking about IPO some time later, not now, because it's actually a very big, long process. But my company, this question, it's just for understanding. I looked through a great number of NASDAQ companies, and the main goal was to find the company with the lowest valuation at IPO. Why is it important? Because I want to understand what is the minimum value of company which is going which wants to be public. Because NASDAQ, for example, can introduce only companies which have 1 billion plus valuation at IPO. Okay, sometimes I found 50 or maybe 80, but it's very, very rare. And
of the University of Wisconsin.
services, for example.
Can someone, Vadim, can you please make this up?
It's okay.
Yeah, I understood your question. So, like, first of all, where is your company based?
American company. It's registered in Delaware. We have offices in the United States, in UK.
So, there are different exchanges. So, of course, if you look at NASDAQ, it requires like $billions like to but you can start with some simpler exchanges, and like the simplest that I know is like some local like regional exchanges. You can start like at least to look in this direction if your revenue, I'm not speaking about valuation, because valuation is like subject of your auditors to talk to. So the process looks like that. Is if you at least $3 million company in revenue, and if you can show potentially big growth, like next year and next years, if you have scalable model, then you can start thinking about how to get investment even, and to make a company public. There are specialized private equity funds who can help you with this. And if you're really serious about it, you can contact me. I will, connect you, and we can discuss about it like after this webinar. But of course, it's not like every company just, we want to go to NASDAQ and we go to NASDAQ. So we start with something simpler, and it's really, it may take about 1 year, 2 years to become public, but it's really, a way to think about future.
And here one more question. So there are a lot of companies, special acquisition companies, and it's a kind of other branch how to become public, and not following all that hard standards of securities authorities. So when is it better to use this contract, this transaction, I mean, of special acquisition, this company, or to go by direct way?
It's very complex question. So every company is unique, and I just cannot say anything when I don't know your company, So it depends on a specific situation. And you know, we have special consulting group who's working on this direction. So these people like make public 15 companies. So they can definitely help you with this topic. So.
Sorry, the last question, because because I just wanted to hear the answer of professional, you know, not just some research. Okay, so what about private market? Because for now, it becomes really popular trading of private stocks, and I even found a kind of stock exchange of private equity of private stocks. And some companies even offer loans against private unlisted stocks. So
it's a very shady question, and if you're gonna talk to any like real investor, I mean serious investor, like millionaires, so I know, like, so they would never invest in private company unless they know specific owners and they have some personal relations with them. Why? Because according to US legislation, as management of the private company, you can do anything with this company. You can withdraw funds, you can do whatever you want. And, you know, they're allowed to do this by law. That's why we really recommend to invest into public companies. They're, you know, they have to follow some rules, at least, not to fool investors.
Okay, thank you a lot. Thank you.
Yeah, you're welcome. Okay, guys, do we have any other question? Last question. Okay, thank you so much. We really appreciate that you come to us, and I hope that you found our webinar valuable, and see you on the next one. Bye-bye.
For your information. Bye.